Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Whitton and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hey, good morning. Welcome to Wealth Coffee Chats, folks. Thanks for joining us today. Good morning. Good to see a couple of the early birds on already. Fantastic to have you here and welcome along. I'll do the quick intros while everything is warming up out there in the world of live Facebook and YouTube land. Jason Whitton's my name. You probably know that, and if you didn't, well, now you do. Welcome along to our morning show, which is Wealth Coffee Chats. We've been doing this for a little while. Well, myself and my team have been doing it for a little while. Ever since COVID kicked on in sort of 2020, we've been diving into a daily live show about investing. We've got a bit of a property investment bent, but investing in general, managing our mindset, our money, our assets to grow some wealth, to create something in the future that you might be able to create passive income from. Some assets that go to work when you don't want to anymore. That's the idea. So welcome along. If that's you, then you're in the right place. We dive into a little bit of fact from fear, folks. There's plenty of fear out there in the market, certainly when it comes to the property world. Geez, I tell you what, plenty of people talk about things going down, round, around, sideways, whatever it is. We're a long-term investment idea when it comes to real estate. It's a get rich slowly idea. Don't buy a property that you're not prepared to own for 15 to 20 years. Buy a good one. We've got a saying that's basically buy well, don't fucking sell, right? Keep the damn thing. The idea is it's meant to be a great store, a safe store of your wealth as you go along. Understand how to structure yourself properly when it comes to your affairs, how you own things, what you should do when buying and or if you ever have to or want to strategically sell, know how that's going to be calculated. So today, I wanted to talk a little bit about that as an idea. Give us a shout out in the chat. Where are you today? If you're new or even you're coming back, give us a hello. Always good to have you on the show. But we're going to dive into a little bit of an idea about minimizing our personal income tax. Hey, listen, at the end of the day, for you, for I, for all of us, we are playing a game of tax in the Australian taxation system. If you are domiciled here, you're a resident, you're a citizen, whatever it is, you're a company, you have an exposure to a tax system, a tax game. And we call that the game of 30. Andy Fenton, a good compadre of mine. You guys might know Andy. We've been riffing on this idea for many, many years.
when it comes to structuring our asset ownership, structuring your asset ownership in a way that you can distribute income, minimize tax unnecessarily, and maximize, the disposable cash that's in your pocket as an investor. And Andy came up with this little structure I'm going to take you through today. So the idea that, can we minimize our tax? Can we structure our affairs and earn income low tax? And I put it in the headline. Can you earn $200,000? Hey, Kevin, how are you, mate? Can you earn 200 grand and pay no personal income tax? And the answer is yes in Australia. A lot of people think that might be illegal, but no, it's not. You've got to get some assets into a certain structure, and you buy certain assets. But let's have a yak about that today. Let's have a bit of a conversation about the game of 30 and how you can minimize those taxes and maximize the amount of money that you get to spend on your lifestyle and in a way that you want. We're going to pay tax on our consumption, folks. Let's face it. I've got no issues with paying tax when I consume a certain thing. I just like the idea of minimizing legally your personal taxes, so you get a bit more money in your pocket. You can pay your taxes when you consume things, and you know what? You shouldn't be giving the politicians any more money than you legally have to, as far as I'm concerned, in this country. Anyway, there's three parts to this process when it comes to our personal, super, and structures when it comes to paying tax and the rates we pay tax at. Now, play along in the chat if you want to, if you're there, if you can whack it in the chat. What are the tax rates? What does it go from when it comes to your personal tax in Australia? An individual of working age, male, female, irrelevant, we're all taxed the same way in that circumstance. What are the tax rates that we're exposed to in our personal world? This is the personal space, okay? This is where personal comes in, and how do we manage that? Well, listen, folks, there's a range of 0 to 47%. Now, I don't know about you. I don't like the idea of paying 47% tax on my income. And if you don't like that either, well, there's ways we can manage that, right? So let's have a look at personal. This is where you, either as a PAYG, a career earner, job career, you earn money as your personal income. You as the person earn the income. What does that person have to pay as the tax rate, right? And right now, there's two kind of levels that I talk about with our investors. There's obviously you can go from 0 to 47, but there's two milestones. So 125K. Actually, it's 130 just now. I'll update that just quickly because it just changed. 130 and 200,000. All right. Why are those two numbers so important to understand in the Australian tax system? Right. It is a progressive tax system. It goes from 0 to 18,000 or 19,000 no tax, and then X percent as you go up. But 200,000, you will pay 30% tax, not a 30% tax rate, but 30% tax on the money that you earn progressively. And 130,000 in Australia, it's 25%. Now, why are these numbers important? Flow with me here, follow with me here around the board, because this is what this is important to understand, right? So if we use $200,000, 30% tax on $200,000 for all of you listening in at home is, chuck it in the chat if you want to, play along, is 60K. All right, 60K, $60,000 in personal income tax. You pay it as an individual. Can we reduce that? Can we reduce our personal income tax as a PAYG job earner, PAYG job earner? The answer is yes. The answer is yes, you can. The most effective way in Australia to do that, the easiest way, which is the world of property investing, right? Property investing. We help our investors, our property investors, buy investment properties. We've got a bit of a plan between 3 and 6 investment properties over a 10-year period. If you can keep your momentum going, you can reduce this tax rate down to single digits. All right. We've got many investors reducing their personal tax rate from 30% total tax paid to 5% or single digits, under 10%, when you structure yourself correctly for the thanks, Luke. 66,000. Thanks, mate. The personal tax situation, reducing their tax down, right? Property investing with depreciation and ownership and all of those other things is something that we want to use as a vehicle for wealth creation. I always say to people, listen, you're going to pay the government 30% of your income anyway. Why don't we grab 25%, which you were going to give to the government? We're going to use that 25% to buy you and create you a property portfolio. We're going to structure it correctly so it doesn't impact your cash flow too much. Personal tax, personal cash flow, and then move on with your life, right? Now, this is the thing. Here's the cheeky stuff when it comes to these things. When you get to 250,000, if you can get your personal income up, it becomes now 200,000 kind of a sweet spot, because when you go over 200,000, where's the next place that we like our investors to consider? All right. And up here, this one from an income point of view, the tax structure for super is 0 to 15%. Who likes the number 0? Courtney says, hey, hello, single digit tax. I like that, Courtney. Hey, how are you, mate? Yeah. So in super, why don't we pay 0, right? And we like these numbers, 0 and 0 from an income tax point of view. I'm a bit of a fan. The game of money, the game of tax, the game of wealth is about keeping as much as you can legally and spending it wherever you want, whether it's on lifestyle, whether it's on taking care of your family, whether it's on, putting some aside for a rainy day, whatever it is, okay? Buying some assets, away we go. You as an individual earn money. You pay tax or you calculate some tax. You've got some assets, then offset the amount of tax that you pay. That's part of the system. You reduce your 30% to 5%. Happy days. You're owning and acquiring some assets into the future. When your income pushes above this, or if you are navigating some of this and you want to beat 25% or 15%, money from your personal world, either way, it might get paid by your employer. It might get paid by you for an extra contribution to super, whatever that might be. Jeff, how are you, brother? Money flowing here now can go into your super for the future at a tax rate here on the way in. Most of you in contribution phase are going to be paying 15%. So how much can you pay? Chuck it in the chat while I have a little sip of my coffee. How much can you put into your super every year and pay 15% tax on that income, that money that goes in? Put that in the chat for me. How much cash now? It just improved, just upgraded. How much can you as an individual put in as you go? So you can put in $30,000, 30K, and you'll only pay 15%. That's right. 30K. 27 has just gone up. Luke, used to be 27,500 and whatever, and she's up now 30,000, which is good. All right, now, folks, can you reduce the tax rate in your super? Can you negative gear in your super? What? That's a good question, isn't it? The answer is yes, you can. You can reduce that tax rate if you want to. There are ways to do that with property and other assets. Whatever you buy in your super, it will be taxed at a 15% income tax rate. Yeah, your return on that assets, and that's how it happens. Now, when you move out of super, when you move from an age, when you move your super into retirement phase, the tax that you pay on your amount that you can put into retirement phase is a magic number, is a special number. Who knows the number? A few of you heard me talk about this one before. Zero. So zero tax you can do. There's transition to retirement, but you can start to get access to stuff like this at between the ages of 60 and 65. All right, 60 and 65. So you can do top ups. You can do all sorts of stuff. Now, if we could do 0% tax, and we were sort of all sitting here and go, well, where and how do I buy some assets, and what do I create my wealth with the future in? Super makes sense at this moment in time, right? Certainly, you've got to earn some money personally. You've got to manage that well. You've got to have money flow into your super. You've got to manage that well so it grows over time. But you know what? Right now, up on the 1st of July this year, it's at the moment it's 1.9 mil, but it's indexed and going up. 1st of July, it will be $2 million. $2 million. There you go, Jeff. Nice, mate. Yep, you're on it. 1.9. It's going up to 2 million in July. Folks, you can have $2 million go into your retirement phase as you go, right? So once you pass the age of 60 to 65, depending on the years, you can put it into retirement phase. It grows in value, so you'll pay zero tax on the capital value, and you'll pay zero tax on the income on those $2 million. Now, that's fucking fantastic. Mind-blowing. Amazing. Fantastic. Go, you good thing. All right. Who likes them apples? What's the flaw in this, though, for most Aussies, especially if you're a bit younger? Let's say you're under the age of, I don't know, let's call it 50, maybe 45. Let's say you're under the age of 45. Let's say you're 30. You're like, holy shit, mate. Like that, my super's 35 years away. Like I'm not, I need a bit of a different plan other than waiting around for friggin' 35 years. Well, you don't need a different plan. You need 3 different plans. Your personal investment plan, this will come into fruition pretty quickly. I'm telling you, this one will happen over time. It's kind of what I call the plan B, right? It'll kick into it, as you go. So no, Courtney, this is indexed as you go. So that income, which is pretty good. So as it grows, happy days, right? If you get up to $3 million worth of assets, there is some talk about taxing over a certain amount as well. So I'll get some details on that from our main man, Andy Fenton, about that sort of stuff as we go. Now, listen, folks, we might want to bring forward, we might want to have some access to tax earned, income earned, tax free, or no more personal income tax to pay in Australia. Does anyone know how you can earn money personally and pay no more personal income tax on those earnings? Does anyone know what the idea is called, what the thing is called? All right, might be giving it away here. Chuck it in the chat for me if you think you might know. Might be giving it away. It's to do with structures, right? And some of you might have heard these terms before, and we're going to do selling eggs. So, mate, Jeff, that might be true. You know, sell some eggs for. That's why they're getting rid of cat, Jeff. No eggs up and down the street anymore because no one's got any bloody money. Listen, folks, this is a company, all right? company structure, okay? Owning assets in a company, right? And there's two tax rates for companies. There's 25% and 30%, okay? Right? Now, this is the thing. If you own shares in a company, either on the stock market or a private company, you can, this is how it might work, all right? So just quickly, I'm running out of time, but I'm going to talk about this. There's a thing called a franking credit. Franking credit. Franking credit. Franking credit. There we go. Franking credits. Now, I'm going to leave you hanging today because let's rejoin. Let's rejoin on this one. I'll do a part 2. Elroy, yeah, you can. So a trust gives you flexibility, like as in who you can pay, Elroy. So technically what we would do if we wanted to dive deep into it, the trust would own the investment company. The trust would own the investment company, and then there would be beneficiaries under the trust to receive the money, and franking credits would flow from the assets that it owns through the investment company, through the trust, and out into the beneficiaries. So that's kind of a bit of a deeper dive. But again, all of that depends on how you're structured, how you own assets, and what do you want to achieve. Because companies aren't great for capital gains, or they're okay for capital gains, but personal and trust, if you own assets for capital gains, you get a discount. So there's a few things that you've got to consider. So income management, I love a good investment company as we go along. Anyway, folks, that's it for today. I'm going to take this back up Monday. This is a date. Let's book it in. Monday next week, because Wednesday, Thursday, Friday, Wealth Coffee Chats, we've got the 6-star team at Positive popping in and doing their thing, the property managing team, the accounting team, and the property team. They'll be popping by and doing their thing. So let's book it in Monday next week. We'll dive into the investment company idea. And let me leave you with this one. You can earn up to about $250,000. I'll get the exact numbers from my good man, my good friend, Andy Fenton. In a investment company using franking credits, as an individual, the franking credits pass through to you, and that money that you earn already has the tax paid on it. So there's no more tax to pay as an individual, up to 25 or 30%, depending on how you're structured. Anyway, I like that. I don't know if you're the same. I like the idea of understanding how to use the rules to our advantage. Anyway, there you go. All right, folks, that's it from me today. I'll leave you hanging on that one, but join me on Monday next week, and we'll go through the franking credit deep dive. Yeah, there you go. If you want any help with this, give us a shout. That's what we do. Come and hang out, have a listen to what we say. Maybe the team can help you out with where you're at. There you go, folks. That's it from me. Take care. Wealth Coffee Chat done and dusted for today. Be good. Stay well. Remember, this thing's a marathon, not a sprint. Creating wealth takes a bit of time, a bit of patience, a little bit of tenacity. But let me tell you, it's worth it. Take care. See you next Monday, but join tomorrow. The team will be on. The property management team are on tomorrow. So join them then. All right, folks, that's it from me. Take care. Bye for now.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are